All right, let's talk about this week, because we are looking at something pretty rare and really powerful. You've got three totally separate, high-stakes stories that are on a direct collision course, and it is all happening in the next few days. So let's break down what's really at play here.
These are the three big forces. You've got a dramatic escalation in the Middle East, then you have what is probably the single biggest event of the year for AI, and finally, you have the U.S. Central Bank giving its first official response to a whole new economic reality.
And that's the big question, right? Any one of these stories could drive the market all by itself. But this week, they're all competing for money and for attention at the exact same time. So, which story is going to win? Let's take a look at the battlefield.
Okay, first up, the geopolitical shockwave. Just when it looked like there might be a way to de-escalate things with Iran, the whole situation got completely turned on its head over the weekend. We're now in a much more dangerous and uncertain place.
The timeline here is just critical to understanding what happened. On Friday, there was actually some hope. Iran's president put ceasefire terms on the table. But then, boom, the weekend hit and everything changed. After his father's death, Mojtaba Khamenei is now the new supreme leader. And his first public statement? Total defiance. Then you have President Trump saying they're ready to talk, only for Tehran to flatly deny it.
And this quote, this really tells you everything about the new reality. The first thing Mojtaba Khamenei says to the world isn't about peace talks, it's about doubling down. He's sending a super clear, non-negotiable, hardline message. The Strait of Hormuz, that economic choke point, is now officially a weapon, and he has no plans to put it away.
And then you get this public he said, she said. On Sunday, President Trump claims Iran is ready to negotiate. Hours later, Iran's foreign minister basically calls it a lie. Now, this isn't just diplomatic squabbling. It shows that the lines of communication are completely broken, which seriously raises the risk of a miscalculation from either side.
So what does this all mean for the market? Well, just look at oil. West Texas Intermediate crude is holding steady above $100 a barrel. That war premium that's been baked into the price, it's not going anywhere. In fact, it's solidifying. It's creating a new, higher floor based on all this geopolitical fear.
Now, for our second force, AI's counter-narrative. Right as this war premium is hardening, the tech world is unleashing its biggest event of the year, NVIDIA's GTC conference. And this thing has the potential to be a massive gravitational pull in the exact opposite direction of all that geopolitical fear.
The big theme here is a shift from just training AI models to actually running them. We're expecting to see new chips made just for AI agents, maybe an open-source platform for businesses, and a huge push into robotics. It's all about getting AI out of the cloud and into the real world.
And this creates a really fascinating tug-of-war for the market. On one side, you have the risk-on case. Tech has been getting hammered for 2 weeks while money fled to the safety of energy stocks. A really exciting keynote from NVIDIA could be the perfect catalyst to suck that capital right back into AI. But on the other side, you have the risk-off reality. If another scary headline about Iran drops mid-keynote, it won't matter what products they announce, macro fear will just steamroll everything.
And that brings us to the third and final force, the Fed's reality check. This week, the Federal Reserve starts its 2-day meeting. This is the first time we're going to hear their official forecast since the war started, since the new tariffs went into effect, and since oil shot past $100. This is their first roadmap for a potential stagflationary world.
Now look, the actual interest rate decision this week, that's not the main event. Not even close. The real story is the dot plot. It sounds complicated, but it's just a simple chart that shows where every single voting member of the Fed thinks interest rates are headed. It's the best look we get inside their heads.
And here you can see exactly why the rate decision itself is kind of a sideshow. The market is pricing in a 92% chance the Fed does, well, nothing this week. They're just going to hold steady. All the attention is going to be on what they say about the future.
This chart really shows you how much the market's thinking has already changed. I mean, back in January, traders were betting on 50 basis points in cuts this year. That's 2 full rate cuts. Today, it's down to just 20 basis points. That's maybe 1 small cut late in the year, if we're lucky. The market is already braced for a much more aggressive Fed.
And if you want one number that tells that whole story, it's this one. The 10-year Treasury yield, which is a benchmark for borrowing costs for basically everyone, is sitting at 4.3%. That number reflects all the market's nervousness and its bet that rates are going to stay higher for longer.
Okay, so you've got these three massive forces all crashing into each other. How in the world do you track which one is actually winning? Well, here are the 3 key signals you need to watch this week.
First, the NVIDIA keynote. The reaction in Nasdaq futures during and after the event, that's your instant report card. Does tech pop or does it fizzle? Second, watch the diplomatic channels. If you suddenly hear a country like Qatar or China announce they're formally mediating talks with Iran, oil is going to move instantly. That's the clearest sign of de-escalation. And third, keep your eyes glued to that 10-year yield at 4.3%. That'll give you a real-time read on what the big money thinks the Fed is about to do.
So, there you have it. That's the setup. A massive AI catalyst is going head-to-head with a hardened war premium, all while the Federal Reserve gets ready to deliver its verdict on the economy. 3 stories, 3 powerful market drivers. This week, we're going to find out which one really matters most. Stay nimble.